The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Mark Longo here from the Options Insider Radio Network and the OptionsInsider.com, and I'm breaking in to your regularly scheduled program to give you guys an update on our Options Insider Educational Series. Now, a lot of you guys have been asking us when we're going to do something else like our groundbreaking Unusual Activity Forum that we held back in May at the CBOE. Well, mark your calendars for December 7th, because we're diving right back into the educational fray with an epic event on that Saturday, December 7th. We're going to break down the retail options trading landscape with 3 seminars held in partnership with our friends over there at OptionPit.com. We'll break down the key mistakes that cost retail traders real money in the real trading marketplace, as well as how to properly implement and manage and adjust some really critical strategies like debit spreads, credit spreads, collars, risk reversals, butterflies, covered calls, the whole 9 yards. And best of all, this is going to be an online event, so you can join us from the comfort of your own home in your favorite bunny slippers. Don't miss this epic educational extravaganza with 3 seminars from 3 of the leading names in the business. Reserve your seat today at theoptionsinsider.com/events. And now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the Options Insider Radio Network. And we are joined today by our usual cast of characters, starting off with a man who hasn't been on the show in quite a while. I know a lot of you have been missing him, but we got him back for you, listeners. He is none other than the jaunty Cap One himself, Mr. Alex Jacobson, a.k.a. the Viceroy. Alex, welcome back to the program, sir.
Thank you, Mark. It's great to be back. I missed not being on the show, and it's the high point of my day, especially on a great day like today. Market up. Volume good, a good day overall.
Admit it, Alex, the day for you is not complete unless you've done an option block.
People are going to think I'm kidding, but this is about the most fun thing I do here.
No, I believe you. I believe you 100%.
That's very unfortunate for you, sir.
Yeah, and much of our crew is in Vegas for the Money Show, so I'm the resident compliance education officer for a few days. Believe me, the show is on good days, the show is the high point, and on challenging days, the show is clearly the high point.
I tend to avoid that den of iniquity in Vegas whenever possible. I decided to go institutional this week and go to the Global Derivatives Conference instead and mix it up with those folks a little bit. Maybe I can share some of that stuff on the show a little bit later. But before we do that, we are also joined by another guy who isn't on the show often enough, but we got him back for you as well, listeners. Good old Mark Sebastian by way of Option Pit and also Swan Wealth Advisors. Mr. Option Pit, Mr. Sebastian, welcome back to the program, sir.
Good to be here. Yeah, quite the day here, huh? A
little bit of something.
It's been interesting just watching options move the last couple of days, and I can't wait to dig in.
And speaking of digging in, we'll also be digging in with Uncle Mike Tusaw a little bit later. As usual, he has been called away by a pressing client emergency, but he'll be here probably in the trading block as soon as he could make it. So without further ado, let's start the show and dive right on into the trading block.
The trading block.
All right, listeners, you know what those bells mean, and that trading cacophony. It means it is time for the trading block, the portion of the show where we break down the day's worth of action and activity. And as we alluded to there just a few moments ago, it is indeed a bit of an interesting one today. Saw some upside going on across the board. S&P up about 0.8% to 1795. The Dow closing above 16,000, up 110 handles roughly, or about 0.7 of a percentage point, and the good old NASDAQ leading the charge, up about 1.2 percentage points on the day, or nearly 50 handles to 39.69. A lot of activity going on across the board today. Mr. Sebastian, what caught your eye first amongst today's activity?
I think the just utter destruction of VIX futures was just fascinating to watch. They are taking down everything. You know, they're talking the debt ceiling now doesn't really land until June. And, you know, who's worried about taper? That was not real. And just an absolute drubbing. They obviously pulled out Thanksgiving today. And it looks like they're getting ready to pull out all of Christmas, too. I
was going to say they're getting to Christmas next.
Just getting obliterated.
It is interesting to watch. Apparently, there's nothing to fear for the rest of the year now. Everything's baked in at this point.
Nothing to fear but the vol crash.
You know, it's interesting you talking about the term structure out there in VIX. I joked I did spend some time this week. I was invited to cheer the Global Derivatives Conference. I got to spend some time with those folks, and there's a lot of talk there about things exactly like this: VIX term structure and the VIX ETPs and all the fun stuff we like to talk about on this show. Quite a bit, and there was a lot of interesting data that I was kind of just parsing out of a lot of those sessions, including some interesting stuff. For example, this one I made a note of because I have to go verify it myself. I've never really heard this before, but one of the presenters there, who was a researcher into the VIX ETPs, was saying that a lion's share, a lot of the flow in those ETPs we talk about, VXX and all the other big products that we see out there in the universe around VIX, a lot of that in recent years has been driven by RIAs. When particularly you got guys in the family offices who use it as a proxy, even for some of the products that they can't get optionality because they're prohibited, so they use things like a VXX. Interesting. I had never heard that before, and I don't know if I'm dubious about it, but it is interesting. I want to kind of dive into that more. Have you heard anything like that as well, Mr. Sebastian?
No. But it sounds interesting.
Also, you sound so interested. But also, you know, you're talking about term structure. A lot of good data just on how VIX skew has evolved over the year. VIX skew. How SPX skew has evolved, and indeed VIX as a result, and how we're seeing a lot more in the way of, you know, not too much in the put wing. Tail risk has kind of plateaued a bit. They haven't seen a lot of people grabbing up for stuff like that, but they've actually seen a flattening out in terms of people actually starting to come in and let's say scoop up a lot of upside in VIX and actually some call buying as opposed to the traditional, you know, writing scenarios we've been seeing a lot of there. So that's actually tended to flatten out some of that skew, which has been kind of interesting to see a lot of that play out as well. It was really a really fascinating event. Before I get more down into the weeds of all the different minutia I was looking at over the past couple of days, Mr. Alex, Mr. Viceroy, what caught your eye first amongst all of the tumult of activity going on over at OX today?
Ironically, we had a fair amount of people bullish on the VIX, looking for 13, 14, 15. We saw a lot of activity there. We've had some trading in Twitter. I know you and I have traded emails about that, but almost all the Twitter paper here, say that 3 times fast, almost all the Twitter paper here has been bearish. And we've even had people looking to, physically short the stock, which at this point still can't be found to any degree in the retail community. So,
what's the short rate working on these days?
I didn't look today, but last time I looked, it was in the teens, which is still pretty expensive. I heard Henry the other day talking about that the first day it came out, the short rate was 100.
Yeah,
it was annualized the price. The other thing we had today, and this is kind of characteristic of our customer, is we saw a lot of activity in the triple-digit stuff, the Amazons, the Netflixes, the Priceline's. Almost characterize those as the ideal retail option stock. I don't know that, there is an ideal, but that's the place where the options market sort of really shows its value in that higher price stuff. And we had a lot of activity there. I talked about how good our October was, and our November has been terrific as well. I mean, it's just been the right market for the savvy option trader, for the person who's got a sense of what to do in this environment. And the interesting thing is, even though the broad market vol, is down, some of the individual stock vols are good. So we saw a lot of that.
No, it's interesting you mentioned Twitter, because a lot of people were pinning a lot of hopes, perhaps a little bit optimistically, on Twitter being another one of these big names that's going to come in and kickstart a lot of volume. And it certainly seems it's done well. I mean, don't get me wrong, it certainly has done well, but it certainly doesn't seem to perhaps be the game changer a lot of people were hoping for it to be from an options perspective here going into the end of the year. I'm looking at the numbers again now, and the ADV is continually ticking down pretty much every day. With today, it was hovering around about 120,000 contracts. It's down to about 40,000 contracts. Granted, only a few trading sessions to average that in, but still trading about 86, 87,000 averaging these days. So continually ticking down as perhaps that initial furor, that initial hubbub over Twitter kind of dying down a little bit. Is that kind of your take as well, Alex? It's been all right, but it hasn't really been a big needle mover over there at OX?
Yeah, and in some ways there's a logical explanation. In some ways there's a nonsense explanation. Obviously it qualified for listing, so it's got 2,000 individual non-related customers, but I don't think a lot of it is in retail hands. And I would bet, and this is another one of those forecasts that somebody at some point will send me an email telling me that I missed it totally. But I would bet if it holds 40, you'll see a secondary in the next 90 to 120 days to get more of it out into retail.
Yeah, cash out while the crazies are still out there.
Yeah. Well, that's you don't do secondaries near the market lows. You do near the market highs, and there wasn't a lot in the IPO, and it didn't get into retail. I mean, yeah, you can buy it. No, you can't short it. So that still tells you there isn't a ton of it sitting in boxes. And traditionally like this, people get very frustrated because you can't short it. They sometimes don't have a clear understanding of the stock loan function, and a lot of it is still sitting in the institutional accounts. So it needs a little more retail to start to get real trade lift in the options, I think.
You know what we need? We need the Twitter Mini. Then we'll be all set. That will be the big driver.
That's the kiss of death.
But you're right. We had one on the show I think last week, and some of our other programs as well. If I had a few bucks maybe for every question we got about the Twitter put options, that would have been a good business in and of itself over the past week. A lot of people trying to figure out what the heck was going on out there, and interesting stuff. Speaking of interesting stuff, I said it's been kind of a crazy week for us over here, in addition to all the fun stuff going on at that conference, which, by the way, there were a lot of quants at this event, too, and it was kind of interesting to see how the outlook has changed for quants in the derivatives market just over the past few years. They asked me on one of the panels I was on, they said, what is the outlook for the quant? And I said, if you had said 5 years ago, I would have said, wow, no ceiling for those guys. This is really where all the jobs are, so much demand for them. And then, of course, 2008 happened, and now these guys seem like they're so beaten down. Of course, the number of shops that could employ them has contracted to be charitable, so the number of job openings has contracted, and plus the job itself just isn't as sexy anymore. A lot of these graduates now, they saw the mess of Wall Street and they decided they don't want to go into that. They want to go out to a Google or something else that's a much sexier job, and also with options and things could actually be as commensurately rewarding. And so it seems like the job of quant has really kind of fallen off a cliff from both perception and actually interest, which I thought was kind of interesting.
And you got to think about the macro funds. I mean, if you think about Stevie Cohn is out of the business. Soros has given back, all but his own money. The big macro funds have shrunk in size a lot in the last few years. And there's kind of a domino effect for the quants. I mean, quants are still valuable. Great quants are still worth their weight in gold on Wall Street, and but you've got so little macro trading anymore that until the macros come back, and it's a long conversation about what high frequency did to the macros, but until the macros come back, if they come back, the quant business is going to stay soft because that was A, the home for many of the quants, and B, at the brokerage houses, the home for the quants who service those people. I mean, it's not that long ago that if you had a, PhD in physics, you went to Wall Street instead of going to DuPont or Dow Chemical, and just the undercurrents of what's going on. Biggest shop here in Chicago is Ken Griffith, Citadel, and he's calling for the breakup of the banks. So it's an interesting time.
Yes, there was. And there was actually a Citadel guy on my panel, so I got interesting to hear their view on all that kind of stuff as well. And surprisingly, they shared a lot of it. I was interested in that. But, there's so many great
the fact that they were evil, correct?
Yes, that was the takeaway. That they are indeed the mother of all evil. But, Mark, there was a lot of great takeaways there, also diving into things like, the VIX term structure. Maybe I'll save some of that for when we bring vol views back onto the schedule in heavy rotation, because there's a lot of meat to chew in on the bone. Things like some interesting data points on how when VIX ETP volume and the Vega they were consuming kind of crossed that inflection point with the VIX futures itself, and now how there's so much extra Vega out there from retail and other places versus when the ETPs were driving all that stuff, and when that inflection point occurred, and a lot of really interesting stuff that I think we can get into in a lot more detail when vol views returns. Coming soon, listeners. I know we've done a few TV shows for you, so hopefully we'll get all that worked out, and it shall be back in its glory relatively soon. But before we get to that, speaking of glory, I had some other interesting experiences this week. I was perhaps not exactly options related, but I was invited to a screening of a new documentary with Hank Paulson and Rahm Emanuel about Hank Paulson and his time at the Fed. His time at the Treasury during the whole crisis. I think it's called Hank. The movie's just called Hank. And it's on Netflix. You can find it there and a few other places. If you haven't had a chance to check it out, listeners, it's kind of interesting. It didn't go as in-depth into perhaps a lot of the nuances of the crises as I was hoping for, particularly some of the particulars around AIG and some of the things that are more relevant to our derivatives audience. But it was still interesting to see kind of his mindset as all this stuff unfolded, and this guy was just being besieged on all sides as one crisis and then another. Sometimes in the same weekend, 3 banks would default, and it was just, this guy was really taking it on the chin. And seeing a little bit of the repartee between him and Rahm Emanuel before the show, that was probably the best part of it, because to see how those two obviously very ideologically on different sides of the spectrum, and how they kind of came down on different views for the crisis and whether TARP worked and it didn't. Just so listeners, if you haven't had a chance to check it out and you are a Netflix subscriber, I know a lot of our listeners are, go check it out. An interesting film, an interesting take on what's going on the old crisis. Of course, a lot of other things cooking out there. You talked before on the show, Alex, about Tesla being a big driver for you guys, and that one, just taking it on the chin. This is the first time in a long time we've seen a extended period of drops, drawdowns there in Tesla, closing up today $1, but otherwise, I mean, it was trading. Wasn't that long ago we were talking about 170, now off nearly 50 handles at 122, and all these rumors about Tesla fires being worse than people thought, and all these other things, and the earnings not exactly lighting up the fire, pun intended, really seem to be doing a good job. I know the bears have been struggling for a long time to sink their claws in their teeth, and they seem like they finally have gotten some traction. Mark, any of your mentees out there starting to reposition out there on
Tesla?
on
it's
Tesla?
had a rough go of it, and I know there are a lot of people who think it's overvalued. So, I mean, I would certainly say that. And, I think Tesla is still overdone. And, I didn't think it belonged above triple digits. So, and the vol is easing down. It's now all the way down to the 60s. So, I do think that it's one where if you have a bias, it's now no longer ridiculous to be in the options. The bar has come off a little bit, but it's still heavy. But it's not that bad. And so, if you don't like it, some sort of put ratio makes a ton of sense to me.
Yes, the Tesla options are not exactly as prohibitive from a premium perspective as they once were. Of course, another name has been rallying quite a bit. Too bad your counterpart, Mr. Andrew, isn't on, because I'm sure he's loving this extended ride that Zynga's been on. He's been talking up Zynga. He's been talking up Zynga risk reversals. He's been talking up Zynga strangles. It seems like either way, whichever way he's gone, he's probably doing pretty well right now. Zynga closing today, $4.37, up another dime, or about 2.5%. This name suddenly seems like it's resurrected from the doldrums. And starting to have some signs of life and actually becoming relevant again for options traders. I know when it was hovering south of 3 for a long time there, it didn't really seem too relevant. Now, Alex, I know a $4.37 stock is still not exactly optionable to you, but it's getting there. It's getting in that realm again where it's starting to become relevant for the old options traders, and it's doing some serious volume, doing 90,000 contracts out there today in Zynga. So
Andrew has walking around going, See, I told you. See how awesome this is?
It's a good thing he's in Maine. Otherwise, he'd be insufferable in person.
I know.
He's just counting all of his Zynga risk reversal money.
Look at me, Zynga. I told you so.
That sounds exactly like him, too. Well done, sir. That's a good impression. All right, and that is going to do it for the old trading block. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. That funky tune means it is time to dive into the seedier side of the options business. We're going to kick things off actually with an alert we featured yesterday on the website. And again, if you want to read all of these alerts in much more detail and also get all the stuff we didn't get time to get to on the show today, surf on over to theoptionsinsider.com, click on the unusual activity tab. At the top of the page, you can find these alerts we're going to hit today and a lot more we don't have time to get to on the show. But we're actually going to kick things off with an alert from yesterday. And again, all of you guys who want the dates, I always keep forgetting to do this, but we are recording this today, November 21st. You're hearing it on the 22nd. So there you go. Keep that in mind for your frame of reference as we dive into the old odd block. First off, Alex is going to love this one. First off, we had a big review yesterday, or a big alert yesterday from Star Scientific Inc., ticker symbol STSI. This is one of our Odd Block Specials listeners because it closed today at $1.33. So a big, high-flying name. And what we saw today was someone just coming in for some serious size here. In the Jan 1/2 calls, they went up for prices between a nickel and 7 cents. No open interest at all to speak of, which is surprising for such a little name. I think they'd have some smattering of interest. Of course, this is not a name that usually trades very heavily, doing probably a few thousand contracts at best a day. Like I said, doing 40 some odd thousand yesterday. And the bulk of these, like I said, 41,751 of the Jan 1/2s going up for a variety of prices around a nickel to a dime. Just lighten up the old tape. Went up in 1,000 lots pretty much on all of the exchanges. Some of them even getting price improved, so good for them. And they ended up coming out after that and going bid again for some substantial size, about 10,000 on the bid. And slowly over time, that bid got filled. Looked like it was someone just really just piling into some bullish size, wanted to get some deltas, wanted to get long some upside here in STSI, and for whatever reason decided Jan is the way to go and not the stock. Mr. Alex, how abhorrent is this trade to you?
I'm learning to live with trades like this. So though, looking at a trade that size, I suspect something other than a pure directional trade is going on there, especially at that price, because it's not something that's going to be in a pure institutional portfolio without some dramatic hedging or some ESOP activity by the company. So, I suspect something's going on here that isn't a pure directional trade, but I don't know that for a fact, but I think something's going on.
Yeah, that certainly seems to be the case. I didn't see any stock, and I don't see, I have us written up here, any stock going along with it. Mr. Sebastian, what's your take here on people just piling into STSI, which, by the way, is a manufacturer of dietary supplements?
Can't lose.
Yes.
This is the layup trade of the year. No, I mean, I just think these are, you don't know. Is it people shorting? Is it people, who knows? Here's what I do know, is that buying a bunch of worthless calls, there's a reason why they're worthless. Because they're actually worthless, right? I remember I was on the floor watching some guy explode because he had gotten cut out of the chance to buy some worthless some worthless butterflies for nothing. And everyone looks at him and goes, let me get this straight. You're mad that you're not getting to trade something that's worthless, and because you think that what's going to happen? Oh, you have them worthless, and guess what? They are worthless. And it's kind of the same thing. It's a big stay away.
Yeah, this guy, I mean, it's not a substantial trade from a premium perspective, but still he's outlaid about $200,000 on this trade, which could get him about 160,000 shares of the actual underlying, right, instead of something that goes away in 2 months. So, yeah, this is just an interesting one to highlight for a number of reasons. Not just the fact that it is crazy and it drives Alex crazy, but also just for the volume and for just perhaps the stay away impact it may have on some of our listeners. But also we'll keep an eye on this in case it is a pure directional spec, and then we'll mark STSI in our to be watched category as we move on to the next name here in the odd block, which is a name some of you may have heard of. VIX, is that VAX? I'm not sure how you pronounce that. But this name, good old VIX, of course. We saw the VIX cash at least ticking down nearly a full point, 3/4 of a point, to 12.66 today. And what we saw today was an interesting risk reversal where it looks like someone was trying to gobble up some upside and finance it with a downside put spread sale. We saw the DEES 15 calls going up 28,800 times. Going on up over the DEES 13-14 put spread. He managed to structure it so that he got the calls actually for a little bit of a credit, a 2-cent credit. So I think if Andrew were here, he would be quite happy because this guy is getting his juice essentially for free, but or actually collecting a little bit of money on this trade. But an interesting one, Mr. Sebastian. What's your take here on this guy putting on some upside for credit here in VIX?
I don't blame him. I think it's good. I think it's a great idea. The nice thing is he's got very limited liability on the downside and can really clean up if we get any kind of pop out of VIX in the next couple of weeks, which, is not without, despite the fact that everybody thinks December should be totally worthless. We do have this thing called non-farm payrolls that could determine how Fed policy is determined for the next, couple of months.
Yeah, I agree on that. I personally would have a hard time being short VIX in general right now. Obviously, it would have been a great trade today going into the marketplace, but just we are at the lower end of this range, and if you're bullish on the VIX, I think this is a great way to play not only the VIX, but just a lot of different things to where you have a limited risk to the downside. And then if it does go up, this gives you the opportunity to, as Andrew would put it, do stuff. You can close out part of the D's 13-14 put spread, perhaps sell another call against the 15 call with which he bought. There's a lot of things with which you could do on this and ways of making adjustments.
This trade obviously poised to pop from some of the VIX spikes we've seen recently. VIX known to be very spiky in some of these environments, and if it does pop again, this trade doing all right. Saw some interesting data actually yesterday about those VIX spikes and how they actually take a little bit longer to play out as you initially would assume. When you think VIX spikes, you think it happens a lot of it in one session, and it actually does play out oftentimes over multiple sessions, so you can have a chance to leg into more trades than you might think when you initially think of VIX and just getting blown out to the upside. And if you don't happen to have the trade on at the beginning, you miss all of it. You could actually a little bit more maneuvering available up there than you might have initially thought. Again, more grist for the Vol Views mill. As we keep on rolling into our final name today, China Life Insurance Company, ticker symbol LFC. I know this is on everyone's radar these days. I can't wake up in the morning without checking my quotes for LFC and see how things are unfolding out there. This one closing $47.47. The old 47.47. This is the name that does a whopping 400 contracts a day, doing 2,700 today. And a good chunk of that, about 1,500, coming in a pretty sizable upside buy here in the Jan 55 calls, going up 1,500 times for looks like a bunch of different prices. They started lifting the offer and then kind of like the other trade we profiled, kind of let the rest of it hang out there and get filled later as subsequent sellers started coming in and chipping away at that big 1,500 block chunk. This is China Life Insurance Company. They're, like they sound, a Chinese-based life insurance company. It looks like after we profiled this trade, it looks like some of the Jan 47 half puts went up as well. I'll have to dig into those. It looks like 500 of those went up. Given the price of that, those are $2. This could have easily been a ratio sale to finance that upside on the call wing there. 1,500. It works out even better than 3x1, which is what it is here. Again, open interest on both of those strikes, pretty much immaterial. 300 on one, 100 on the other. So opening paper on both strikes. Mr. Sebastian, perhaps another risk reversal going on out here, out in China Life Insurance Company Limited.
Who doesn't want that?
Yes.
Right? How do you lose?
Who doesn't want to have unlimited upside here in China Life? But it is interesting enough, and it is near term enough that we might put this in our to be watched. In fact, I shall mark it as such as we talk, so we can come back sometime between now and January and see exactly how this trade unfolded. All right, and that is all the time we have for the old odd block today. And now we're going to keep on rolling right on into the Viceroy block, a.k.a. the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Viceroy block. This is the portion of the show where you take off your fedora from the odd block and then put on whatever other fancy cap you have available so you can match the Viceroy and play the home game. And Mr. Alex, it's been a long time since we've had a sneak peek behind the curtain into the land known as OX. So what was cooking? What caught your eye? What interesting developments have been going on over there in the land of Options Express?
So we're about to release a new update for the site, which will have an enhanced charting package, which I was getting a little schooling on yesterday during the day. but that release should also have premium harvesting for futures options that unfortunately should have been out a couple weeks ago, but it's been kicked back a bit. So new technology coming to the site, a handful of other enhancements, and I'll bring Daryl Wagner back onto the show after we get everything released and out. What we do here at OX is the first thing we do is we release it to the staff and let the staff kind of stress test it and give feedback on it. In terms of the trading day, it was busy. I mean, the trading desk guys sitting across from me seemed busy all day today. And in fact, every time I tried to sort of get a query from them as to what was going on, they were on the phone. So it seemed busy for the entire trading day. Maybe a little quiet near the end. And as I mentioned, it was a lot of the triple-digit stuff. Looking at some of our trade data today, our NDX business was good today. Normally, we're a big SPX shop, and not that SPX business was off today, but we did a lot of NDX today, and that may have to do with NASDAQ bouncing up to areas it hasn't seen. Our clientele today was looking to short a little Twitter, which we were unable to find. And other than that, it was a good day overall. Dow over 16,000 and the S&P bouncing right near 1,800. All big psychological marks. Be interesting to see what happens when the S&P, if and when the S&P takes out 1,800. So a good day overall.
It's not specifically options related, but it might be worth on a future show maybe diving a little bit more into that stock loan process and how it unfolds, because it is such a mystery for a lot of the listeners, and they don't really know what goes into it or what goes into those rates. And maybe if we shine a little bit more light on it, we could save ourselves having to answer all these questions whenever a new IPO comes out and the puts are jacked to the moon.
Yeah, and it's almost an old adage in the industry that anytime you look to sell a put because you think it's priced wrong, don't, because something else is going on. And that's kind of one of the oldest questions that you get from people. The at-the-money call is 3. The at-the-money put is 4 1/4. Clearly, I'm the only one who's noticed it, and I'm going to bang those out and say, whoa, wait a minute. Let's talk about what's going to happen when you do that. So, yeah, would be a great conversation talking to I know I get accused of being the geek on the show, but talking about parity and stock loan. And one thing you realize in the brokerage industry, stock loan business.
Whoa, who accuses you of being a geek? Whoever does that, they need to go through me first. I will personally take care of it for you, Alex. Nobody calls you a geek on my watch because you're not. You're awesome. You're the best.
Thank you.
And I will not stand for it.
Thank you. I can now sleep nights. Thank you. But, yeah, I mean, for example, here at the combined firm of Schwab and OX, there are days that stock loan is our biggest business. It's not uncommon at many firms that depending on how efficient their order routing is, and now their payment has diminished, stock loan might even be more profitable at some firms than the actual trading activity, which, again, I don't know if that'll interest people, but you learn a lot about parity and how puts are priced.
Yeah, I don't think that'll surprise a lot of the listeners, and maybe they can learn how hard it is for a lot of these brokerage firms to stay afloat in these quote-unquote zero-rate environments we've been in for a while, when that is such a huge part of your business and the margin business in general, and making other things work.
It's also relevant, and I'll do a little open kimono here, when a client comes in and says, I want a better rate on trading, and you just kind of say, well, tell me a little bit about your account. And they say, well, I trade, X number of times. And you say, well, how much equity do you have in the account? And they say, well, not really much. And they'll say, but, my buddy got a better rate, but he trades less than I do, but he's got $10 million in stock sitting in the account. And you'd say, okay, let's talk about stock loan, and you'll understand why. So could be an interesting topic.
Yeah, and it does play into options, as we just saw last week with Twitter. So might be a good topic. We'll keep it in our holster for a future show, Alex. And now we will keep on rolling right on into our next segment, the two-saw block, a.k.a. the strategy block.
The strategy block.
Yes, listeners, you did hear me right. We are joined, better late than never, by good old Uncle Mike Tusaw. So, Uncle Mike, before we begin the strategy block, let me first officially welcome you to the program. Better late than never, as always.
Oh, it's always good to be here on a Thursday.
Yes, a Thursday, wrapping up the week in fine option block style. Now, Uncle Mike, I always get a little bit nervous when we do these blind strategy blocks because I have no idea what crazy dark alleyways you're going to take us down today. But I'm going to do it again today. I'm going to put my faith and my trust, perhaps misplaced, perhaps not, in you, Uncle Mike, to take our listeners where you will and hope that we all return safely on the other side, sir. So take it away for the strategy block.
Well, I'm going to give you a choice today, Mark. We can either do the importance of having variety in your trading or pro wrestling history, your choice.
Oh, clearly pro wrestling history. Let's start with Hacksaw Jim Duggan, maybe a little bit of Hulk Hogan. Where was some? Oh, yeah, Superfly Jimmy Snuka. We can do that all day. Sebastian, I know, can jump in on that one.
All right. Well, you called my bluff. All right. Let's talk about the importance.
That's going to be a segment for an upcoming show. I like it. Pro wrestling, 80s era. That's the only era I know. 80s era pro wrestling history. I could talk about that for a while.
If I got wound up on that, this show would go on for 4 hours. So I'll stick to variety and trading. I want to bring up the importance of being able to be versatile and have a variety of different strategies within your trading toolbox. The reason that I bring that up is that we had another up day in the market today, and just through the years, I've just seen a lot of people that have traded iron condors or call credit spreads. And when you're on the wrong side of a trade, you need to have the ability to either, number one, get out of the trade, or number two, understand how to manage the trade or just adjust it in one way, shape, or form. Oftentimes people look at the trading world with rose-colored glasses and say, oh, okay, I can sell this call spread and I'll get 20% so long as the stock market or so long as the underlying doesn't go up X amount between now and expiration. We've beaten that to death on this show in terms of not looking at the expiration day risk-reward graphs. But with all that in mind, what I want to emphasize is that let's say something's not working. Obviously, as on a macro level, selling call spreads has not been working on the market in general over the course of the last few years. Now, don't get me wrong. If you time it out right, it's always possible to make some money here and there. I'm not trying to say it's never worked by any means. But if you have been selling call spreads in this marketplace over the course of the last 3 or 4 years, chances are you haven't been doing well. And that's whether you've been doing it with a full iron condor or just with a call credit spread. So what I want to emphasize is have the ability to modify your strategy to a different market. Now, of course, you're wondering, well, Mike, as soon as I do that, then that means the market's going to go down. And then I would have been fine just sticking with the call spread. Well, something to be said for that. But I think that what you may want to consider doing is just having a strategy in mind that matches the market in different conditions. So, for example, I am a dyed-in-the-wool diagonal spread person, meaning that for a lot of my clients, we have been in this diagonal spread, diagonal call spread on SPY for many years, and it's done really well. Now, it's not that I'm a genius by any means, it's just we've had a bull market. What I try and do is at times when we are in a lower volatility environment, as it is my opinion we are in right now, I try to make the call closer to being at the money, the short call that is. Reason being is that the premium's cheap, might as well take it. So it's kind of the concept of where, let's say you're in a stock, it runs up, and then you sell a put, and then you buy a put to protect your gains. That's the concept with which I try and use with diagonal spreads, especially in a lower volatility environment. Now, don't get me wrong. I need to also be aware of that there is more time decay that is putting the long call at risk, so I have to adjust the short call accordingly. But my point is that within this strategy, this is one of many strategies with which I do, but within this strategy, we're trying to adapt to the various markets. And right now, I'm trying to adapt to a market with which we have a lower, in my opinion, a lower volatility level. A wise man once told me, and the wise man, some people even call him a geek, but I would never do that out of the fear of Mark Sebastian. Well, actually, it's out of respect. I really don't fear Mark Sebastian that much, although I do respect him as well. But a wise man once said that volatility is high only if you think it's high, and volatility is low only if you think it's low. So theoretically, the VIX could go to 2. You never know. But I don't think it will. I think the odds are that the VIX is going to go higher over the course of the next few years as opposed to lower. That's my opinion. And with that, I would emphasize, have the ability to adapt to your strategies in different markets. And that is one to grow on.
So basically, if you just write iron condors all the time, you're pretty much all set?
Pretty much.
I like it. Good stuff.
I saw a statistic the other day on naked put selling. And do not try this at home without a consenting adult. But, and I'm going to get this wrong, but it basically looked at selling 60-day SPX puts. God, I'm going to get this wrong. I think 5% out of the money. And over the last 26 years, it made an incredible return. Now, before anybody tunes out the show right now, 27 years, it would have destroyed you. Because it would have included October of 87. So don't worry about raw statistics. And to Mike's point, have a plan. It's so important to have a plan. A good option trader, and I'm sorry to jump in on your session, Mike, but the best option traders I've ever seen, a trader is good, not when their last trade was good, but when their next trade is good. And, that sounds like a Norman Rockwell put it on the wall thing, but you're only as good as your next trade. So have a plan in place.
And that's absolutely right, too, because in football, one of my mottos to live by in football was the only play is the next play. It doesn't matter if you flat back a guy the play before, you lay him out. If you go out there and you give up a sack, then you're going to be destined for a career in option trading, and that's just the way it is.
I don't know about you guys, but I learned a lot from Norman Rockwell's lesser-known tome on options trading. You could find it on finer, rare bookstores. And the man was quite wise beyond just his painting of family values in America. He knew quite a thing or two about derivatives as well. You would never expect that. But thank you for that, Uncle Mike. A scintillating strategy block, as always. And now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, welcome to Around the Block. This is where we look at what we're looking at for the week ahead and for the weekend ahead, and what's kind of on our collective trading screens. And Uncle Mike, we'll let you go first because you kind of missed the trading block, so we can let you do a combo trading block / Around the Block. First off, tell us what kind of is top of mind for you right now, what you were up to over the past few sessions since we last spoke to you, and then we could dive into what you're up to and what you're watching for the rest of the week.
Oh, all sorts of fun stuff. I'm just kind of going through something today through our this various silver trades I've gone through since the middle of July, and that basically with all the hedging and calls and puts with which we've done on silver's up a little bit since I had looked at it, and even with all the hedges and covered calls and put spreads and things like that to finance the protective puts, we're actually ahead of what we would have been in had we just been in silver. So that doesn't happen too often. Normally we're lagging a little bit, so we're pretty happy with that. Just in general, just to kind of add to what I was talking about before, I've had to reinvent myself probably about 6 times over the course of the last 6 months, I'm convinced, just with all the different market sentiments with which we've had. May 22nd, when Bernanke kind of hinted that the taper might not be going on forever, really kind of not throw a monkey wrench in the market, but that's just another example of how things can change at the drop of a hat, and you need to really emphasize that. In terms of what I'm looking at right now, just to kind of add to what we talked about earlier, just looking at these new all-time highs, I want to see if the Russell can make a new all-time high tomorrow. We're very close. See if the S&P can finally close over 1,800, and just see what the Dow can continue to do. We're at very key numbers right now, and curious to see where we're going to go.
Speaking of Russell there, of course, bringing back the old Russell VIX, good old RVX. So it'll be interesting to watch if that product can get some traction. It's actually a relaunch of an older product that was, I think, closed out back in 08, somewhere around that time frame. They're bringing it back to see if lightning can perhaps strike once in this product. So it'll be interesting to watch and see if all that VIX love spreads to some of the small cap traders out there and they start using this product on some sort of ratio or to hedge or some interesting strategies out there in RVX land. Mr. Sebastian, what's catching your eye and your attention for the rest of this week here?
I just think it's going to be a race to see who can take down option premiums and whether we're going to be able to make a run at 1,800 and hold it. That's really all that I'm watching for the week, and it should be interesting.
So, according to you, they've already taken out Thanksgiving. They're about to take out Christmas, and New Year's is right around the corner.
Yeah, they're trying to take down anything they can right now.
So there you go, listeners. All the diehard premium sellers out there in our audience, particularly on the weekly side of the fence, maybe pick your spots a little bit better right about now, or perhaps, hey, maybe you buy something. I'm just going to throw it out there. Maybe you
bite your tongue, you degenerate, you.
I'm going to do it the Giovinazzi way, so you end up getting all your juice for free. But at the very least, try to put on some long primo in scenarios like this where the market's giving you a little bit of a deal from a vol perspective. All right, and Mr. Viceroy, take us home, sir. What are you watching for the rest of this week?
1,000 points on the Dow in just over 120 days. Dow taking out 16,000. To everyone's point, will S&P hold this level and take out 1,800? If this continues, we've had a compression here. I think that 1,000-point move in whatever it is, the 120-something days, is the fifth or sixth fastest time it's ever occurred. If that compression continues and we keep going up, VIX will go into single digits. I grew up with a VIX of 7 and 8, and I think you get to a systemic risk level. And again, everybody's right. They're taking it out. No one's seeing a lot of risk. We have the Bernanke put. We now have the Yellen put. There are no rates. That means barring the bozos in Washington screwing this up, which they could. Today they changed the filibuster rule. But if the bozos in Washington ever get their stuff together, SPX is going to take out 2,000. Dow's going to take out certainly 17, 18, maybe 19,000 in this rate environment. So that's what we're looking at. Looking a lot at Washington, looking a lot at the psychological levels here. Like the fact that volumes come back in. It's always nice when you're going up with good volume. As we used to say when I started at Merrill Lynch years ago, if you go down on light volume, that's like being up. That, of course, makes no sense, but we liked saying it.
I was going to say, where does that one come from?
It's what you used to tell customers. We were down today, but it was on light volume, so, don't worry about it.
I like that. I may have to appropriate that.
Yeah, and these vol levels, in my lifetime, every major move in the market, every melt up, every meltdown in my lifetime has come off of what was in hindsight, God bless hindsight, a historical low in vol. So I think vol could go lower here, and we could have the making of a melt up. I think it's going to be cool to watch.
All right. Thank you for that, Alex. And that is going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, let's check in with each of our cohorts here on the old All-Star panel to see what's cooking in their respective necks of the woods. Starting off with you. Let's mix it up. Mr. Sebastian, I know what's coming up for you guys. A little thing on that day of infamy, perhaps an infamous event as well. We'll know when we do it, but it should be kind of fun.
Saturday, December 7th, we're going to spend 4 or 5 hours. You, me, Andrew, and probably a fourth person. We're going to be talking about options and how to use them. And it's going to be a great class, single day, $138. You really can't beat it, and it's a great way to support the Option Block and all of its contributors.
That is true, and as Andrew said on the last show, we'll try not to destroy Pearl Harbor in the process, but no promises. It will indeed be an infamous and perhaps even epic event. All right, speaking of epic, Uncle Mike Tusaw, what's coming up on the old TNT webinar train?
Well, you guys, since you're listening to this on Friday, you guys may have missed the best webinar ever last night by Mark Sebastian. If you have not had a chance to see it, send me an email. I'll be happy to send you a recording of it. But with that, we have the webinar train continuing to roll. We will have announcements on confirmed dates next Monday.
Stay tuned, listeners. And last but not least, Mr. Alex, what is cooking over there in OX Education?
So a full slate of webinars. Just come to the site and click on the Education tab. You don't have to log in. Couple I'll showcase. November 26th, Tuesday, we're doing a handful of webinars showcasing Walk Limit, Hub, new features on the site. A rare in-person appearance by the Viceroy, December 3rd. I will be at the Fairmont Hotel in San Francisco speaking at a Schwab event. They're actually putting me on an airplane if you realize how big I am is an achievement in and of itself. But December 3rd at the Fairmont Hotel, a free event. And obviously Schwab folks and OX folks will get an invitation. But if you want to walk in, we're going to do a premium harvesting session. The event is free. And other than that, we're keeping our fingers crossed for 1800 on the SPOO.
All right, great things to watch there. Alex, thank you for that. And, of course, while you're keeping our eye on things, listeners, I encourage you, surf on over to theoptionsinsider.com. A lot of you guys listen to the show, and a lot of newcomers maybe don't know that much about what we do on the website. I encourage you, check it out. A lot of great content over there, education, analysis, unusual activity. A lot of the great stuff we talk about on the show here in much more detail, and a lot of other stuff, too. Headlines from the options market, breaking news, industry updates, all kinds of really fun stuff, even some stuff for you guys out there in the financial advisor world who are looking to learn more about options. Of course, you can find all of the archived episodes of this and every other program on the old Options Insider Radio Network, all of it over there at theoptionsinsider.com. And while you're doing that, click on the events tab and go ahead and register for this event we're holding on December 7th with our friends over there at Option Pit. Should be really, really interesting. We're looking forward to doing it. And on behalf of Alex and Uncle Mike and Mark and, of course, myself, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to this program. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.